Record levels of apartment development are testing the demand drivers for one of the nation's most sought-after markets. What effect is all of this supply having on the Raleigh-Durham apartment market? Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Triangle Update. Raleigh-Durham was pinpointed by investors and developers early in the recovery cycle. Its national profile grew very quickly as investors looking for safe bets drawn by the Triangle's so-called recession-proof demand drivers, lots of jobs in government, education, and healthcare, plus a lot of college students. And take a look at what happened. Apartment development soared to a 20-year high. Construction hovered around or topped the 10,000 unit mark for 5 straight quarters before easing some in 2014 or the early part of 2014. And for some perspective, not only was this a long-term high, but the new peak was 25% larger than the previous construction peak going back 20 years. That's a lot. So while it's not unusual to see elevated construction, many markets are seeing long-term highs in new development right now. It's highly unusual to see construction volumes top previous highs by that degree. At the same time, the demand drivers here haven't proven quite as robust as perhaps investors initially had hoped for. Look at this chart showing year-over-year job growth going back a decade. So the current numbers are definitely healthy, relatively speaking, expanding at an average pace of 2 to 2.5% or around 20,000 jobs annually. Those are good numbers, but not great numbers, and they're not on par with the norms we saw here in the mid-2000s prior to the downturn. So it appears that the Triangle's recession-proof economy has also proven a bit boom-proof during this cycle. So here's how the economic story is playing out for the local apartment market. Number one, because the recession was relatively soft here and because job growth coming out of it wasn't especially robust, we didn't see a lot of pent-up demand for apartments accumulate only to be unleashed into all the new supply entering the market. That's a factor that's boosted a lot of other markets nationally where a lot of supply is occurring. Number two, new supply in Raleigh-Durham appears to be pulling renters out of middle-aged, middle-tier apartment product. That is different from what we've seen elsewhere, where the middle tier has been a big driver of continued strength for revenue growth in other hot development markets. All that said, apartment development has certainly been very, very solid for Raleigh-Durham, but just not as robust as you might have hoped for, and certainly not as robust also as a pure market like Charlotte, which was hit harder in the downturn, but which also has the drivers at play to benefit more from an economic recovery. So for all of those reasons, occupancy in Raleigh-Durham has fallen in each of the past 3 quarters, down 150 basis points over that stretch, not because demand was negative, and it hasn't been negative in fact, but because demand just can't keep pace with supply. Overall, occupancy right now is at 93.9%, the market's weakest rate in 3 years. And it will likely come down even more over the next 12 months. You can see from this chart that completions will climb substantially in the next few quarters, expected to peak north of 9,000 units annually by Q4 of this year. That's 69% more than the current annual completion volume, which was already well above absorption capacity. So as you might expect, rent growth levels have taken a hit too. Annual rent growth has come in below 2% in each of the past 2 quarters, and after outpacing the U.S. norms through the recession and in the early stages of the recovery, Raleigh-Durham has underperformed the U.S. averages in 4 of the past 5 quarters. So the big questions obviously are, number one, when does supply peak? And number two, at what point do apartment fundamentals recover? We think that peak occurs in Q4 of this year, but completions remain elevated through most of 2015. But it's important to remember that all of the demand drivers and all the factors at play that drew investors here in the early stages of the recovery, they're all still here. And so we think once the supply levels start to taper off to more normal levels and demand starts to top supply again, the Raleigh-Durham apartment market should rebound very quickly. And that wraps up for the Raleigh-Durham apartment market. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.